There's a lot of bad information in the card market that gets treated like fact. And some of it is so wrong that it can actually get pretty expensive. So in this video, we're gonna walk through 18 card investing myths, why they're myths, and what to focus on instead, so you can stop doing the things that are holding you back and get on the path towards your goals. Let's dive right in. Myth number 1. Buying low is the number one priority. Now, you've probably heard people talk about how the profit is made when you make the purchase, and that's absolutely true for certain strategies, but it's not the only approach. And I would argue that if that's the way you're approaching every single purchase, you're going to miss opportunities because you're not going to be able to buy every single card for a discount. Now, don't get me wrong, discounts are great and we want to take them when we can get them, but it's not the only way to win in this market. So buying low is not the number one priority. Strategy is the number one priority. And you got to understand that if you have a winning strategy, you can profit even if you're paying full market value and sometimes even if you're overpaying. So if you're using strategies like grading or playing the seasonal market swings, those are strategies where you have the ability to buy at full price and still profit. Myth number 2, pricing cards high and holding out for top dollar is the best way to maximize profit. So yes, we want to get as much money for our cards as possible, but time has value. And so when we're pricing our cards so high that we're scaring away potential buyers, that means that our money is tied up in that card for a longer period of time while we're waiting for the perfect buyer to come along and make that purchase. Sometimes the best approach is to get more aggressive with pricing so you can move that card quickly and get to the next card. There's always another card out there to buy, and we've got to get to that next move. So anytime you're holding a card, you have to look at what are the other opportunities that are out there that I could potentially spend the same money on if I were to just sell this card and get to that next card. And so it's always asking the question, is this the card that's going to rise the highest and fastest? And if so, then yeah, keep holding it for sure and hold out for top dollar. But if you think that there's a better place somewhere else, for example, if you graded that card and it got a PSA 10 and you made the money on that, or at least you've got the margin built in to make the money when you make the sale, sometimes the best play is just to get out of that card and go buy another one that you can get graded. You're almost always going to make more money getting a PSA 10 on the next card versus holding out on the one that you already graded, trying to squeeze a few extra dollars out of it. So the key takeaway here is to consider the value of time and make sure that you're optimizing for total overall profit, not just total profit on this particular sale. Myth number 3, taking a loss means you failed. This is one of the most important learnings in this market because you're just not going to win on every card if you hang around long enough. And every single time that you decide to hold onto a card for the sole purpose of trying to avoid a loss, once again, opportunity cost is real. There are other cards out there that you could be winning on. And so I'd much rather cut bait and take a small loss rather than stay on a sinking ship and take a big loss. And the thing about these types of cards is you actually end up losing twice. The first loss comes when you actually make the sale and lock in the loss, but the second loss comes from the opportunity cost, all those other cards that you could have been pursuing with that same money. So there's actually a lot of overlap here with myth number 2, where we need to just get to the next card and make sure that whether we're winning or losing, we're keeping our money moving into the best possible place that gives us the best upside. Now, the tricky part is human beings are wired to avoid losses. We don't like it. It doesn't feel good, right? And so one of the things that's really helped me over the years is to think bigger. So I like to think in plays rather than thinking of every single individual card. So instead of looking at a grading order on a card by card basis and saying, did I win on this card, this card, this card, and this card? I'm saying, all right, how did I do on this collective grading order? I'm going to get some 9s, probably some 10s, but did I profit overall on the order? Did the 10s more than make up for any non-10 grades? And if so, then great. Who cares if I lost on 1 or 2 cards in the order? I made money on the order overall. So the lesson here is to just zoom out and be able to see the big picture and just think beyond the individual card, think bigger. Myth number 4, we must stay inside of comps no matter what. Guys, comps are a past data point. They make a nice reference point, but they are not the law, and they just don't dictate the present or the future value. They might influence it, but that sale happened in the past, so we have to be able to think beyond comps. Otherwise, we're going to miss out on a lot of really good opportunities. For example, if you see a card that you think you can get graded and make a whole bunch of money on, why would you not go 5% above comps or 10% above the recent sales when you see a copy that looks super clean? The same thing goes for a rare card that you may not have another shot at for a long time. Maybe the last sale was 6 months ago and it might have been lower in a different market than we're in right now. And so that sale really doesn't matter anymore anyway. That was a sale from 6 months ago. So you got to be able to think for yourself, think critically, think outside the box a little bit about what the value of the card really is in today's market. And also be thinking about where the value is likely going moving forward, because that's all that really matters. As long as you have a strategy in mind that you're confident is going to make you significantly more than what you paid for the card, who cares what you paid for the card? You've got a strategy in mind that's going to be highly profitable if it goes the way that you want it to. So comps are a great data point, but it's okay to think outside of comps. Myth number 5, grading cards is the easiest way to profit in the entire sports card market. Now this one's close, but we have to get more specific. So I would adjust this to grading clean cards with strong grading upside is the best way to profit in the entire sports card market. One of the most common questions you see on the internet from newer collectors and card investors is, should I get this graded? And really it just comes down to the value and the condition. If the value makes sense given the grading fees and the time you're going to invest, and you think you can make more than what you're paying for that card to get graded, great. That sounds like we can check the first box. And if the condition is clean enough to have a chance at the grade that's going to add that kind of value, then great, we can check both boxes. And then the answer to that question would be yes, you can justify getting that card graded. If you can't check either one of those boxes, then don't grade the card. You need both. The value and the condition both have to be there. But as long as it's clean and it's got strong grading upside, that's exactly what we're looking for. And that is a proven, repeatable way to make money with sports cards. Myth number 6, you should hold cards long term. Now I'm going to be really intentional with the way that I explain this, because some cards absolutely you can make money long term. So I don't want to give you the idea that you can't win with this strategy. The problem with this is that it's not every single player. In fact, it's a very tiny subset of players who actually end up mattering in the long run. Even if you pick a star caliber player, a lot of those types of guys just don't rise the way that you might expect. It's typically just the best of the best players. So my long-term hold strategy is to look for the best card of the best player in the highest grade that I can find if I plan on holding more than a year. So just because a player's good or even great doesn't mean that he's a good long-term hold. And don't even get me started on the prospects and those unproven names. Myth number 7, to see a card's potential upside, just look at what it used to sell for in the past. Guys, I've even seen some of the guru type of people out there talking about this, and it's just so false that I don't even know where to begin. But when you look at where a card has been in the past, yeah, sure, it's nice to see high numbers where you can say, oh, well, it's at least seen this price in the past, so it's at least theoretically possible that it goes back there again. Maybe, but the thing is, we now have more data. We now have another season of performance on that guy. I could sell you all kinds of horrible, failed prospects that used to sell for big time money back in the day because we didn't know what they were yet. Now we know what they are. And so just because a card sold for a certain price in the past does not mean it's ever going to see that price again. There's probably a very good reason why it's a lot lower right now. The player probably sucks, or we probably figured out that the player isn't actually the superstar that they might have looked like at one point in time. So looking at past sales and trying to figure out like, oh, this is down, and so we know that it's going to go back up to that. No, you don't. That's not how the market works at all. And anyone telling you that does not know what they're talking about. Please don't do this. You're going to get absolutely crushed if that's your investing strategy. Myth number 8, you should deal in cards from every sport to make sure you're diversified. No, you shouldn't. You should deal in the cards from sports that you actually have some knowledge of. And so if you're someone who does baseball and basketball better than you do football, skip football. Like, do what works. Do more of what works rather than trying to get cute and do things that you don't actually understand thoroughly. 20 years ago, when I was getting started in this market, I dealt in baseball cards and baseball cards alone for multiple years before I started branching into football and basketball. And at this point, I'm pretty dialed on the big 3 sports, but you won't see me dealing in hockey cards or soccer cards because I just don't know those markets as well. And so it's actually a bad use of my resources. It's a bad use of my money because I know that I can get a strong ROI from baseball, basketball, and football. I'm not nearly as confident on the soccer or hockey markets, so I'm not going to put my money there. I'm going to focus where I know that I'm going to win. Warren Buffett, the billionaire investor, talks about aligning your investing with your expertise, and that absolutely applies to sports cards. Now, how do you expand, right? Because eventually you might want to learn something new. So over the past few years, I've had an interest in some Caitlin Clark cards with just how strong her market is. It's really interesting to me, especially from the grade and flip standpoint. And I know basketball, I know the products since there's carryover between categories, but I don't actually know WNBA that well. So I started small and I just got acquainted with Caitlin Clark's market alone. And I'm not going into 15 different players all from the get-go. And this lets me learn the market without getting overexposed to something that I just don't know enough about. So if you're trying to learn something new, I recommend starting small before you start dumping big money into the market. Myth number 9, grading results are based on luck. Now, I absolutely understand why people would think this, because as long as human beings are grading cards, there's going to be some human error and some subjectivity built into the grading process. But here's the thing, it's always been that way. I've graded cards for over 20 years, I've sent thousands of cards. It's been that way since day one. And so yeah, you don't always know what grade the card is going to get when you send it in. I think of it more like a spectrum. So instead of being, is this a 9 or is this a 10? I think of it like, how likely is this card to get a 10? And if I like the chances that it's going to get a 10 and I like the upside, then I send the card in. If not, then I don't. But we have to accept that there is some human error in the process, and that's okay. You can still win with grading. But wait a minute, Ryan, if there's human error in the process, doesn't that mean we have to be lucky and catch a grader on the right day if we want to get 10s? If that was the case, then there would be no one in the card market that was getting better or worse results than anyone else. It would all just average out over enough submissions. And we know for a fact that that's not how the card market works. Because the people who know what they're doing and who have built the skill of grading and have refined and sharpened that skill of what to look for and what types of cards have enough value to submit for grading, those are the people that are getting consistent results. I know because I'm one of them. And no, not every single card that I submit for grading comes back the exact grade that I thought it would get. And sometimes I'll even have an entire grading order do better or worse than I thought it was going to do. But when you look at the big picture and you actually zoom out and you look at hundreds of cards over time or thousands of cards over time, that's when you can start to recognize there are absolutely patterns between what you send and the results that you get. And the more you can understand those patterns and the more you can understand what actually is a PSA 10, the better you're going to do. And because we get to pick what cards we submit and when we submit them, that actually makes this a repeatable process. And if you put in consistent work, this is where we see people building cash flow in the sports card market. So grading's not a game of luck, it's a game of skill. And the better you get at that skill, the better your results are going to be. Myth number 10, it makes sense to learn the card market alone. It does not make sense to learn the card market alone. If you try to go on your own, there is a 100% chance you're going to burn some money by making a mistake that was completely avoidable because someone else has already learned that mistake the hard way and you could have learned from them instead of trying to do it yourself. And so the big unlock here is to prioritize learning and get yourself around other people that are going the same direction and find yourself a peer or two in this space where you can bounce ideas off of each other and learn from one another's mistakes instead of having to make every single mistake on your own. You're gonna go so much faster compared to trying to do it all by yourself. Now, if you don't know where to go to find people that are going the same direction, that are in the card market trying to make money, I wanna personally invite you to my card investing community, Ignite. It's the exact thing I wish had existed 20 years ago when I was trying to learn this market for the first time. And it's a place where you can learn proven strategies, surround yourself with people that are running into the same obstacles that you're running into, and working through them together. Now, the key word there is work, because you do have to put in some consistent effort. This isn't one of those get rich quick things. But I built Ignite to shorten the learning curve in the card market and help more people win. If that sounds even a little bit interesting, I'll leave a link in the description with full details. But even if that's not for you, please find yourself some kind of support system in this space. Find yourself a Facebook group of card collectors and investors. Find someone on Instagram that's doing the same thing. Get involved on YouTube. Get involved in the comments section down below. There's always conversation going on here. Like back when I was starting, YouTube was basically just like the Charlie bit my finger video, and there was no card content. But these days, there's no excuse. On my YouTube channel alone, I've got dozens of videos breaking down card strategy that are available completely for free. So please just use the resources that are available to you. Myth number 11, can't miss prospects are safe investments. Guys, even some of the top ranked prospects in all of the sport still will bust from time to time. It actually happens a lot more than you might think. Back when I was writing my book, on page 38, I made a list of a lot of the different names that I had actually made money on in my earlier years investing in cards. And the list is interesting because there's a mix of some players that are, Hall of Fame caliber players like Mike Trout, Justin Verlander, Aaron Judge. And then there are these other players that you probably have never heard of before. So other guys that I made money on: Wes Hodges, Isaac Galloway, Slade Heathcott, Jacob Turner. So just a bunch of names of guys that at the time were decent prospects. Some of these guys were top ranked prospects even for their organizations. And you don't even know who those guys are unless you were prospecting baseball cards back in the day. And so it's worth keeping in mind that far more players bust than boom. And there really aren't that many Shohei Ohtanis out there. There really aren't that many Aaron Judges or Mike Trouts out there. For every one of those guys, there's 1,000 names that don't actually pan out. And that even includes guys that people thought were sure bets. So even for the quote unquote can't miss guys, there's always some risk investing in cards. And it's also okay to just take the profit when it's available rather than holding forever hoping that that guy is the next big thing. Myth number 12, awards raise card values. You see people talking about this all the time in card groups and on social media where it's like, oh yeah, I'm just gonna wait till he wins Rookie of the Year and then I'll sell. Or I'm just gonna hold till the Hall of Fame and then I'll sell. Guys, that's not how the market works. You have to understand that there's a certain level of performance that's already factored into card values. And so when people are expecting someone to win the Rookie of the Year late in the season, or when Shohei Ohtani or Aaron Judge, speaking of those guys, they run away with the MVP, and by the time you get to the MVP announcement, everyone already knows that they're going to win it. It's a formality by the time the award is actually announced. So it's not the award itself, it's the performance on the way to that award that raises card values as they're exceeding the market's expectations throughout the season. Now, an award or a Hall of Fame announcement can get you a short-term liquidity bump where they're in the news, they're getting some media coverage, but you got to keep in mind that oftentimes that's when everyone else in the market is listing too. So even if we see a short-term liquidity or demand bump, we oftentimes also see a short-term supply bump that matches that liquidity and demand bump, and that also contributes towards stopping values from rising the way that people assume. Myth number 13, cards straight from the factory like a redemption card or a sealed encased card are automatic grading candidates because they're straight from Topps or straight from Panini. Giant myth, because you know what else comes straight from Topps and straight from Panini? Cards that go into packs. They go into packs directly from the manufacturer and they're still off-centered, or they still have a scratch from the surface from that roller line, right? So you can't assume that any card is going to be perfect just because you redeemed an autograph card and it came directly from Topps. You want to evaluate that card just like you would evaluate any other card before submitting it for grading. Because guess what PSA is going to do? They're going to evaluate it just like any other card that you submit for grading. Myth number 14, you need to put in tons of time to succeed with cards. Now, I'll tell you what, getting some reps definitely helps you learn the market faster, but for most people, this is not a full-time business. This is something that they do on the side for fun and make a little bit of hobby money or build it up into a lot of hobby money. Now, you can't just snap your fingers and expect a pile of money to appear, right? Like, you have to put in some work for sure, but what I find to be more valuable than putting in a ton of time is putting in consistent reps on the right things. So there are a lot of things that can distract you in this space, and there are really only a handful that are going to repeatably move the needle in the right direction. So focus more of your time on those things, and you're probably going to be pretty happy with the results that you get. The people that win with cards are just the ones that keep showing up without quitting, and they make good decisions and let those decisions compound over time. Myth number 15, so talking about grading here, the cheapest grading turnaround is the best option. So we talked about this a little bit earlier, but we have to remember that time matters and time has value. The longer our money is tied up in our cards sitting at PSA waiting to be graded, the longer it's going to be before we can flip for a profit and get to the next card and keep things moving forward. Now, we don't want to just blindly overspend on a fast turnaround that makes no sense given the value of the card, but if you're submitting cards that actually have meaningful upside, sometimes you can pretty easily justify paying an extra $8 to get your cards back a full calendar month faster, or even jumping from that $25 submission into the $50 submission and getting your cards back in half the time. I think a lot of times we tend to gravitate toward the cheapest option, but cheap isn't the same thing as best. So just keep in mind that it may be worth considering those other turnarounds to get your stuff back way faster. Your wins can't compound until you get your cards back. Myth number 16, values are at all-time highs for this card or this player, so it can't be a good buy at these prices. Tell that to Shohei Ohtani cards. Tell that to Michael Jordan cards. Tell that to Tom Brady cards. So over the years, we've seen it time and time again that certain cards of certain players do continue to rise over time. So the statement that cards are a bad buy because they're at all-time high pricing is only relevant until it's not, until someone shatters through that glass ceiling and resets what we thought was possible with a brand new all-time high price. Now, it's definitely uncomfortable if you're the one paying all-time high price, but yes, it's possible for cards to go even higher. Now, what I like to do if I'm pursuing this type of a play is to make sure that I actually have a firm strategy in mind, like grading or like the seasonal timing play, so that I have a backstop. Because without a timeline in place, I'm kind of just hoping for the best, which again, it can work if you get the exact right player. It's just a little bit tricky to pick which of those players are actually going to continue to rise. Now that leads us right into myth number 17. Values that are high are never going to come back down. Sometimes it feels that way in the moment. When things are going good, it feels like they're just going to keep going good. It feels like, man, if I sell this card today, I'm going to regret it by next week when things are even higher. But we've got to keep in mind that things do change. The market can swing. Things can pull back. Sometimes it's even healthy for the market. Like what we saw during the pandemic was a pretty unsustainable rise. And then it was followed up by what I would consider a very healthy pullback. And that kind of created the new foundation, the new baseline for where this current growth is coming from. But just make sure you understand the risk for the moves that you're making because things can change. All right, last one, myth number 18. If I do all the work, I keep all the money, and that is the fastest way to grow. Pretty obvious where this myth comes from because, of course, if we keep more money, we make more money, right? Well, not necessarily. For example, once you get pretty good at the skill of grading and you know how to find clean raw cards to get graded, and they're going to make you $100, $200, $500, $1,000 per card, it is no longer a good use of your time to be listing $2 and $3 cards for sale on eBay. It's just bad ROI. And it's especially bad because there are other services out there that are happy to do the work for you so you can still get the money out of those $2 and $3 cards. I don't know about you, but $3 is $3 and enough $3 and you can buy a much bigger card and that's great. So I definitely want that $3. I just don't want to put in the work to get it. So I'm going to outsource that work, put the price on the card, and then just wait and let it sell when it sells. I'm constantly auditing where I'm spending my time in my card business because I'm busy these days. Back when I was just starting, I had all the time in the world and I had very few responsibilities. I didn't have any money, so I had to grind my way up, but I had time. These days it's flipped where I now have more resources to work with, but I don't have as much time. I've got a family, I've got young kids. So I'm constantly asking, how can I get the most ROI for my time here? And so the question I'm always asking myself is, what's my hourly rate for this particular task? And if it's like 12 cents an hour because I'm scanning and listing and negotiating and shipping all those $2 and $3 cards, I'm probably not putting my time in the right place. If you're someone who's trying to scale this thing, a big lever that you can pull is to just figure out how can you get more efficient with the time that you're putting into it already. Guys, a lot of this stuff sounds right until you actually put money behind it and learn it the hard way. So I hope this helps you break some bad habits and get on the right track. If you want details on how you can join the Ignite team, links in the description. Otherwise, we'll see you on the next video.